Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, great to see you, my friend.
Thanks for having me.
So a lot has happened
Absolutely.
since last week. We recorded last Wednesday, and obviously Silicon Valley Bank went under and was taken over after our recording.
Yep.
Signature Bank was taken over.
Yep.
Reasons unclear. And Silvergate had previously wound down.
Yes.
They weren't actually taken over or anything, but big fears in the banking industry from basically when we recorded last time until mostly yesterday. But
and then you can
now.
add Credit Suisse onto it as of this morning.
What did they say?
Well, one of their top investors, which is, I believe, a fund or somebody that's related to like the Saudi Arabian family, one of their largest equity holders basically said they're not willing to put in any more investment or increase their equity stake. And that didn't provide much confidence. And so what I'm guessing is happening is you're probably seeing like further deposit outflows from Credit Suisse, but you've had their credit default swaps like go crazy.
Got it.
And
So
now
it's spreading a little bit. It hasn't stopped spreading yet, I guess.
Correct.
So
and it went from just being a U.S. regional bank issue to now being a little bit more international in the sense that a large Swiss bank.
Basically, every bank now is having to be re-underwritten by whoever it is does that.
Correct.
Yeah.
And right now it's the U.S. government, and so there's this huge like moral hazard. Like is this what you're supposed to be doing, which is guaranteeing all banks and bank deposits for everyone, including, the big guys. Like, is that what you realistically need to have a fully functioning banking market now?
It's kind of what they've done.
It's kind of what they've done, but it's such an interesting paradox where it's like, okay, you have inflation you're trying to fight on one hand, and then you have a banking system that really, and a bond market that really can't handle the pace and the height of the rate increases that are kind of required to get the inflation down or previously thought. And so it's a very interesting dynamic. And it's like, I was talking a couple weeks ago, we were talking about when the Fed's going to have to undo QE, undo quantitative tightening and go the other way. Because we were like, okay, banks can't really buy because when we were talking about it weeks ago, banks can't really buy because they've already bought so much in their portfolios and they're underwater on a ton of them. The currency guys, the guys that hedge currencies to buy the bonds, the currency hedging costs were too high. Foreign real money had stopped buying. And so we were like, okay, where's the marginal buyer? Treasury's going to come in if the central banks aren't buying anymore. So anyway, it's like, there's structural issues in the banking system that are basically telling you your monetary response isn't sufficient or is not complete.
Right.
And so the question is the Fed going to be like, okay, now that they have this facility and they have taken over a couple of the problematic banks and the other banks figure it out, either they get bought or use the facility or whatever it may be, is that enough to contain
when we get through the immediate crisis, then what do they do, right? Because that's what a lot of the street has been even now again repricing their expectations on interest rate.
Absolutely. It's moved
last week, Jay Powell was very strict and hawkish in the Senate. A full repricing with even higher and for longer happened right after that. Now, since the collapses and the banking issues, it's going the other way. The street is expecting cuts, or even even in the question is for this next meeting, right?
Higher for shorter,
or
less high for shorter.
Yeah,
that's essentially what's
the
being
big question on Wall Street
Yeah.
this week has been, what is Jay Powell going to do? What next week?
Exactly.
When the Fed announces a rate, whatever their rate decision is. It had been repriced after he spoke last week to like almost certainly 50 bip increase or close to
like 80% probability.
And now it's like, GS says no increase. Other banks say still 50, like just as predictions. And some people
I don't think any banks say 50 anymore.
Briefly, some did over the weekend, maybe still. But yeah, so now it's like maybe,
0 to flat. Some people are calling for a cut.
Right.
So it's
he
gone
do?
the other way.
In your mind, what's not like the prediction necessarily, but like walk me through the thinking here for the Fed, because there's issues of credibility on the line as well.
Yeah, well, their credibility is going to take a hit no matter what they do.
Because he was hawkish, and then the next day the regional banks had problems.
Yeah, but it's also, I mean, he's got access to data, and there's, people are talking about this stuff, and it's not like the first dollar got pulled like on Thursday or Friday. Like,
right,
people have known about this stuff, and it's also like, the Fed's a bank regulator, the FDIC is a bank regulator. Like, it's clearly a failure by regulators to effectively monitor banks. So it's a really tricky situation.
It's a credibility issue already, is your point.
It is. But for him, it's like he's got his mandates, right? The written ones and the unwritten ones. The written ones of full employment and price stability, and there's actually a weird third one. But his other one that is also super important is, financial stability.
Yeah.
Right? That's not explicitly in his mandate.
But obviously it matters.
Obviously it matters. Yeah. And to be honest, like, it might trump the others besides employment, to be honest. But financial stability, like, people need to have faith and confidence
in the system,
in the market. And so if he genuinely thinks that's at risk here, then I think he's got to pause. And like, there's a genuine risk. I mean, our CEO said this, this morning. It's like, if you're in any banking institution that isn't a U.S. systemically important bank, a GSIB, like, what are you doing with your money?
There's been huge flows out of smaller banks into just every person was calling, moving their money to the biggest bank they have access to. It was kind of what we saw over the last 7 days. That's what you
have to do. There's really no option. I get it. The Fed's got a facility to do this, but again, they're only, backstopping depositors.
You don't know how theoretically, if that would always be there. So the whole idea is you want to be in a too big to fail bank.
Correct.
If you can be.
Correct. And you at this point, if you have money in an institution that isn't a too big to fail bank, you're just taking career risk, like unnecessary, like but
the Fed, I mean, with this backstop, with this facility, they are trying to signal the opposite of that. They're trying to say we're covering, you're safe.
Well,
the president said this. The president said on Monday morning.
But effectively, though, it's like they're lending versus like loans and assets, right? And they're lending you more money than those things are worth because they're taking it at par. But again, it doesn't stem the fact that, like, equity holders and bond holders of these institutions that have to use the facility that ultimately fail, like, those are going to get wiped out.
If they fail,
and it's also like it's a market confidence thing.
It is.
It's like these guys couldn't do banking 101.
Yeah.
So like, why would you put money in guys that don't do banking 101?
What do they say? Like, raise until you break, raise until something breaks.
Raise until you break. But
this is something you've been saying this though.
Yeah,
there are unintended things,
consequences.
While it looks, we were saying.
I mean, dude, Thorne, we have literally talked about how the bank balance sheets are insolvent.
Right.
Like, on this podcast, we like weeks ago, we were like, they've been buying these things and they have to pay out, really high rates on deposits.
Structural issue here.
Structural issue, and we've been talking about it in the context of the Fed's balance sheet as well as other banks. But it's pretty obvious, and that's why we've been in the camp of, like, eventually, they're gonna have to slow down. QT is gonna have to roll off.
So what do you think? Like, just, I mean, I guess why not? Everyone on the street is trying to make a prediction here. What do you think? A dovish hike of 25? Is that most likely?
If I was them, I wouldn't hike at all.
You'd pause.
I'd pause. This is a big deal. And I would just wait and see. Just buy time.
Yeah.
The inflation data, like, we just went through a really strong patch of hot data.
And we had CPI yesterday.
CPI, was relatively in
unchanged, right?
Yeah, it was an okay number. Nobody was really focused on it. We had PPI today that was also came in, so retail sales as well that were more mixed. But we know the structural stories in the back half of the year suggest a slowing U.S. consumer, right, as a function of, one, higher interest rates, ballooning car payments, the reintroduction of student loan payments, federal government student loans, and also just, the savings base, like, getting dwindled down in terms of, people spending more than they save, and that just catching up to them over time.
The longer that goes,
then credit card balances have been rising at these high interest rates, like, that's going to eat into spending, etc. And
so there's reasons. Yeah.
There's reasons, and you also had, like, weird, like, January seasonal effects and, like, adjustments to the data and stuff over the past couple months, and one time Social Security recipients got a raise recently. That was a huge one-time raise. Well, it's not one time, but again, it's like one of those things that made the data, kind of seem artificially high, in my view, at least. So there's lots of things that the Fed can look at and be like encouraged by, and that would warrant pausing of interest rate hikes. But the question now is, will they deliver on kind of the path that the market is suggesting, which is, way more cuts over the next, 12 to 18 months?
Yep. We'll wait and find out. Bimnet Abibi, our friend from Galaxy Trading, thanks so much.